Okay, so good afternoon, and I just want to share some weekly insights on how I think or where I feel prices are going to react in the Euro USD and upcoming news and all this kind of stuff. Yeah. So yeah, let's get to it. Um, so I've annotated certain things in the chart here, and I will let it pop up right now. As you can see, we are already in a bearish direction in Euro USD, or most of the pairs that have been traded against the dollar, right? Since I would say we have a stronger dollar. And anyway, so if you look at this analysis, this small markups that I've done around here, you can see this is my trading range from here to here. These are my trading range, and if this is the previous weekly low. This is it. I've annotated it there. So since this is the previous weekly low and prices have broken below our previous weekly low, I expect that prices will come and run liquidity, then triggering our fair value gap, then continuing the direction to the hot, to the downward side, right? So something like this is what I'm looking for, right? This is what I'm looking for basically. But then if you look at the charts very well, you can see that prices created a lower high and a lower low here, and it has created a new lower low here, right? Which this lower low is the previous weekly hot low. And as you can see within this trading range, we can see that prices created this low here and is now going or heading towards this fair value gap. That's what I'm expecting, that prices should head towards this fair value gap and mitigate it before coming down, because there's liquidity and we know that prices are being drawn to liquidity. As you can see, these whole institutions, these central banks and all these big players in the market, they tend to use how should I even put it, they tend to go and run liquidity or where all the stops are before heading to the direction that normally market goes to. So even though sometimes you might get the direction well or you might get the direction correct, but your entries are not really top notch. I wouldn't say mine is top notch, but then we tend to look at the loopholes that the banks leave behind, then we enter the trade from. So that's why my analogy comes like in ICT trading, we have the time and price. So the price is discount zones, and the time is the session or the particular range or a particular moment where you are going to enter into your market. You have to get these two right. When you get these two right, you can get the good trades that you want to like get into the market. So if you look at the chart right now, as you can see within this zone, I have my premium and my discount tool here. And if you look at within the 50% of my premium and discount tool, you can see that the weekly range, okay, previous weekly range or previous weekly low is in between the equilibrium of our range, right? So for me, anything above or anything below my discount zone is considered not an entry. So for instance, if I had seen a fair value gap or imbalance in my weekly below my premium, below my discount, I'm not going to enter any trade. I need to see prices going to my discount zone. So because we all want to buy cheap and sell high, right? So this is what bankers this is what the whole institutions do, right? This is the whole analogy behind it. They will tend to use smaller money, or let's say a smaller lot, to push markets up, or probably maybe a bigger lot to push markets up to fill the gaps or the imbalances or the other blocks they have left behind, right? To fill those gaps, clearing liquidities and all those stuff above before they use what? They'll use bigger lot size to push the markets downward to the direction that is intended to go. So sometimes you might get the trade right, you might get the direction correct, but then you realize that your liquidity and your stops have already been run before going into it. You question your strategies, you question yourself and all those kind of stuff. But then that's how it is. You just need to use the loopholes that these institutions leaves behind. That's where fair value gaps, other blocks, inducements, all this kind of stuff come into play. So this is basically my analogy, what I'm thinking within, and this is a daily time frame. As you can see, this is the day I'm recording everything. So if price gets to this zone, how will I get my entries right? So all what I just do is that I have my entry module that I've created to be able to enable me to enter into the trade. So I normally go into I think 15 minutes time frame and 5 minutes time frame. Then I get my entries for them. So I just need to see certain things, certain criteria happen. But it's just basically that I just need to see prices reversing. Okay, but I just don't enter because I want to see the prices is reversing around the zone, so I will just enter into the market. No, I don't do that. All what I do is that if prices are reversing, I go into my lower time frames to see certain things before I enter into the market. Everybody has his own strategy, but then this is my entry model. So let's be looking at this zone here to see how prices are going to react within the next week, right? So because I'm expecting that Monday prices should run this liquidity, then Tuesday we get our move or momentum into the market. I don't trade on Mondays, I don't know why, but I just don't trade on Mondays. So we get that momentum into the market so that we can use to enter the trade. Then we capitalize, and as you can see, this whole run would give us 368 pips, right? So probably 360 pips is what I'll be targeting within this week, next week, to I don't know, probably maybe to push prices downward below or something. But then that will be what I'll be targeting within next week. But even though I'm expecting the prices to come and run the liquidities below, I still think this is my exact place where I'm going to take entry. When prices run below, I know that definitely prices will still leave from here. Prices will still leave maybe fair value gaps, or who knows, other blocks and stuff that to enable price to come down, continue to ease down. Apart from that, before I will change my direction or my directional bias in the market, I need to see that prices have broken our previous high. Okay, that is going to the upward side to go and clear more liquidity and stuff. So this is basically my whole analogy behind the Euro USD trade. I'm going to post new strategies on how to trade other blocks and how to get your correct entries and all this kind of stuff on my YouTube channel. Yeah, so go out and go and subscribe and like my videos and everything, because there's more content to come. All right, so thank you for having the time to just thanks so much for coming by and look at my analysis.